Normand, and I'm actually looking forward to this as well. I think, all of us standby letter of credit practitioners all deal with insurance companies. I think probably the largest part of our portfolio is associated with insurance companies. And we have the pleasure today of being joined by three individuals from AIG. I know we've all worked with AIG in the past, and I think this is going to be a great session. Give us an understanding of how the insurance companies are using our letters of credit. So with us today, we have Donato DeLuzio, who's head of letter of credit management at AIG. We have Michael Kubina, treasury analyst, and we have Christopher Denham from who's the assistant director at AIG. Welcome to all of you, and thank you so much for joining us. I really appreciate you taking the time to join us here. If you wouldn't mind, if you got a moment, could you please, I know I've introduced you by name, but if you can maybe share just a little background and just kind of what you do here at AIG.
Sure. Thank you, Frank. I'll let Michal start. Michal is our newest member to the collateral management group, as we call it in AIG. So, Michal.
Yes, so as you saw, I'm currently a treasury senior analyst. I've been working more on the trust side, but now I'm getting in more into the LOC environment and yeah, looking forward for any opportunities to improve the process and basically to learn a little bit more about it. And I think that's it.
Thank you, Michal. Chris, like to introduce yourself?
Thanks. So I head up the overall AIG collateral management team, which includes the trust and the letter of credit side. So been head of the team now for about a year. Been with AIG for 6 years, but working on the collateral management for the last 3 years. So have gotten heavily involved since I've been with AIG on letters of credit, specifically for the Schedule F purposes. That's pretty much a big driver of the letters of credit that we use here. Outside of that, it's for counterparty credit risk exposure mitigation. So those are, I think a lot of the experience has just really been around like the usage of letters of credit for supporting Schedule F. Other needs also are around exposure for capital needs as alternative sources of capital. Great. Don.
So, for those who don't know me, my name is Donato DeLuzio. My friends call me Don. I'm currently head of the letter of credit management department. I've been with the AIG for 34 years. I started in 1988. I actually began working in reinsurance at AIG, and I started in the letter of credit department. Well, actually, my manager at the time suggested that maybe I should make a little move within the organization, and suggested the letter of credit department, which is what it was called at the time back in 1992. So I started reporting letters of credit for AIG, and I manually put them into a spreadsheet for them. And back in 1993, they decided to put a manager above me. And I know that for those of you who have been around for quite a while, that person was Art Stillwell. So Art Stillwell became the manager of the letter of credit group. And we actually brought in a couple of more people to help, because what happened was we started centralizing letters of credit here at AIG. And we found out that there were a lot of letters of credit that were outside of the department that we were in. So when we found out that there were many letters of credit that were still floating around AIG, we needed to bring some more people in. And at that time, we brought somebody in called, and you may know her too, because she's been around for quite a while, Josie Badia. Josie Babby actually worked and still does work for AIG. She's over 40 years at AIG. So she's been here a long time. So Art and I decided that we needed to do something to keep control of these letters of credit. And we actually started working on a database. And that database right now is still being used, but only it was a standalone database at the time. And now it's a web-based database. So it keeps all the information that we get in for letters of credit, and it keeps all the pertinent information, the amounts, the clauses that are there, issue date, receive date, applicant name, the beneficiaries, everything that's pertinent to us and that's on that letter of credit that we receive is in this database. Back in 2013, Art Stillwell decided it was time for him to retire. And I guess I inherited his managerial spot in the company. I've come around full circle at this point. So in 2 weeks, I will also be retiring. So I will not be with AIG anymore. I won't be working in reinsurance anymore. And that's why Mihal here is sitting next to me, and he will be taking over my position at that time.
Wow. End of an era for all of us. For all of us. Go ahead, Don.
An end of an era.
Well, I'll tell you, Don. I've been around forever. I started in letters of credit in 1978, and I know, Michael, what you're going to say, and I don't want to hear it. You know that you weren't born at that time, but I started in 78. I remember Art Stillwell very, very well, and your name among standby letter of credit practitioners. All we have to say is your name, and they know exactly who it is and which letters of credit they're tied to. It's been great. We've enjoyed working with you guys, and it's interesting. So retiring in 2 weeks, that is great. What are you gonna do? You're gonna?
Oh, I'm sure there'll be a lot of things to do. Like I've been telling people, I have a 93-year-old father who lives by himself.
Yep.
My mother-in-law is going to turn 100 in November.
Wow.
Yeah. So, my wife and I have our hands full.
You do.
It's like dealing with children, actually, at this point. So, yeah.
Well, it's good stuff. Good stuff. Well, I'm glad we caught you before you headed out the door.
Yeah.
So this session here is intended for you guys to hopefully share with us just what you do, how you do it, and just give the bankers an idea of how we can even work with you, work with you better, just improve our relationships. One of the questions that I have is, how insurance companies determine whether a client needs to post a letter of credit. How do you determine, it is a letter of credit? How you determine the value? Are there any other options? Is there a preference? Just how does that whole process initiate?
So I guess we do have two types of letters of credit, right? So we have letters of credit, and we classify them as a statutory letter of credit and a non-statutory letter of credit. And as Chris was saying, the statutory letters of credit at the end of the year are actually used for Schedule F purposes, which that letter of credit amount gets placed against the reserves that are being held for that individual company, and it will offset the penalty that we may or may not have to take at the end of the year. So that's why we get letters of credit for statutory purposes. Now, let's see. Let me just give you a little background as to what we mean by that. So a statutory letter of credit, a licensed insurer are frequently the beneficiaries of securities that, among other things, secure recoverable letters, recoverables, which are reserves, outstanding loss reserves, unearned premium reserves
Okay.
that are due from the reinsurer who are not licensed or accredited in the insurer's domiciled state. Licensed insurers receive credit and statutory financial statements for these recoverable and/or reserves if they are secured by acceptable funds that are readily available without delay. That's what we call a statutory letter of credit.
Okay.
And I'm obviously reading this off my walkthrough that I usually do every year with our auditors. So I've tried to condense it a little bit. Now, non-statutory letters of credit, right? They're received from an insurer when writing business for structuring programs where full premiums are not currently charged or classified. That's what they're classified as, non-statutory letters of credit. Non-statutory letters of credit are to be acquired in accordance with underwriting directives. So the underwriters go out, they write the business, they tell the insured, our mutual client, that they need a letter of credit. The client goes back to the bank, gets the letter of credit, and has the bank send it to us. They're not used for year-end purposes as statutory letters of credit are, and they could be issued throughout the year at any particular time. Most of the time, the statutory letters of credit on the other side are issued like from January 1st to December 31st.
Okay. Okay.
So that's why sometimes you'll see our letters of credit are 1/1 to 12/31, and then you get one that's 5/1 to 4/30, and so on and so forth. And the non-statutory letters of credit are more likely to be like a commercial insurance company, Walmart, John Deere. Everybody knows the Walmart letter of credit we hold because there's quite a few banks that are syndicated on that letter of credit, and they take the risk by a percentage of that letter of credit. It's the biggest letter of credit that we hold on the non-statutory side.
So non-statutory then, well, I'm gonna go back to statutory. Statutory, those are usually expiring 12/31.
Right.
I know that because, JP Morgan obviously has a pretty large standby letter of credit book. And let me tell you that auto extension 30 days out is a hectic time for us and getting everything auto extended and approved. And we find sometimes that the amounts actually get adjusted as well. So we get a lot of amendments during that time frame as well. And it usually is for the statutory stuff. We find with the non-statutory stuff, there isn't a lot of activity in terms of the dollar value going up and down or whatnot. Is that correct?
Well, I would say not really, Frank, because what happens is in the reinsurance agreement that the underwriter may have written up with the insured at that time, there probably is some kind of schedule where they're telling the insured that, we'll review this account every 6 months. And at that point, we will see whether or not we could reduce your letter of credit or not.
Okay. Okay.
And vice versa. Maybe they need more funds.
Or maybe they need more. Exactly.
Right.
Exactly. So the underlying transactions would be, or underlying activities, workman's comp, things of that nature.
Yeah, exactly. Workers' comp, energy treaties, transportation, insuring trucks and trains and things like that. Yeah.
So I have a question for the three of you. What are some of the more unusual things you've been asked to insure? I mean, do you have any stories that you could share?
You may have one.
Do I have one? I'm trying to think. I mean, we have so many of them. So, we actually hold almost 2,500 non-statutory letters of credit.
Wow.
The thing that gets me with them is, though, a lot of times, they're coming under the insured name as opposed to the name you would notice immediately, that like a company itself, like Burger King. Like Burger King, you don't usually get a letter of credit for Burger King. You would get a letter of credit for the insured company that's behind Burger King. Obviously, a lot of these restaurants are like, they have a group.
Right, they're a subsidiary of.
Yeah.
Yeah.
So it's to me, that's the one thing that I always will remember about this job. You're looking at this company and you don't know what it is And then all of a sudden, you're like, oh, this letter of credit's for Burger King. And you wouldn't have noticed that if you just looked at the insured name.
Sure, sure. Yeah, you know, the holding companies and whatnot. Yeah, that makes sense.
Yeah.
So what goes it? So I know that you know you're limited as to the banks that you would be willing to accept letters of credit from. How do you determine what banks are acceptable? Do you have dollar values, anything of that nature?
So the first thing we look at is whether or not the bank is domiciled in the United States.
Okay.
That's a regulation that needs to happen. So you know, if we get a letter of credit from outside the United States, we then immediately go back to the underwriter or the insured or the broker. Sometimes they're brokered too, especially on the reinsurance side. And we go back to them and we tell them that, you know, they need to confirm the letter of credit with a bank within the United States. And at that point, then we'll actually have two letters of credit. We'll have the original document, the letter of credit that was issued from the bank that's outside the United States, and the confirming letter of credit that's inside the United States. As far as limits are concerned, we have a department that would look at that. So normally when we get a letter of credit from a bank, a larger bank like yourself, to Chase or Bank of America,
Sure.
Wells, we normally don't go back to credit risk and say, you know, can we accept it? Unless the letter of credit is extremely large, then we would do it. But on a normal occasion, we wouldn't do that. But it wouldn't be our determination whether or not to accept the bank, because we do get smaller banks. We get banks from Bank of Oklahoma, or, you know, banks like that we normally don't do a lot of business with. And somebody would have to come back to us and tell us whether or not they want to, you know, accept the letter of credit. But that would be the credit risk departments.
Okay. Okay. That's
And
fair.
so
That's
maybe I guess there's a little bit of color on
Yes.
that too, is that the credit risk management team usually looks at and has a framework of establishing the guidelines of what's the sizing that they might allow for various banks depending on their business. We don't usually have that. That's kind of there's kind of like a Chinese wall, if you will, that they have their own system that, you know, we kind of go to them and say, hey, there's a new letter of credit, or even if there's a new bank that we've never used before, and credit risk will kind of give their guidance on the strength of the bank, and then say there's no problem with it. But there's an internal framework in terms of what allowable limits based on the size of the bank that they would do.
Do you ever have situations where you ask the customer to pre-approve the bank, or to come to you and say, hey, listen, I'm going to work with this bank. Is that okay? Do you ever get that?
That would be the underwriter's decision to do that.
Okay. Okay.
Right.
Okay. So that's
they
all part of the
do
underwriting
that.
process in all likelihood then, right?
Right.
Okay. That makes sense. That makes sense. So one of the things that, you know, as a banker, that I think of insurance companies all the time is automatic extensions. And your LCs are out there 1 year with an auto extension. How do you monitor those? I mean, you've got thousands of them, I would imagine.
Right. So getting back to what I said, that was one of the issues when I first came into the letter of credit department. Even though there weren't a lot of letters of credit that we were holding at the time, what we came to realize was there were letters of credit that were expiring. And the reason why they were expiring was because these notices of non-renewal were going to individuals within the company sitting on somebody's desk.
Yep.
And they weren't telling anybody that they had received it. And before you know it, the letter of credit was expiring and it was gone. So when they first gave me this department to work in, that was one of their first major concerns. So what we do is, in our database, we have flags to make sure that the clauses, all the clauses are there, the bank obligation clause, the beneficiary clause, the evergreen clause, the automatic, right? We have those flags in the database. So when we receive a notice of non-renewal, the first thing we do is we go back into the database, we uncheck the flag for the evergreen clause, and we change the expiration date to whatever that letter of credit is going to expire on, what date that is. And we run, every month we run a report. So that we get a report of every letter of credit that we believe is expiring that we received a notice of non-renewal for. Now, obviously, for whatever reason, sometimes we don't get those notices of non-renewal. Sometimes, and that's one of the reasons why, you know, everybody asks us, how come you don't accept overnight courier service? That's the one thing that banks always come back to us. And it's not that we don't accept overnight courier service, for instance, to issue a letter of credit, a new letter of credit. That's fine, we'll accept that. But we don't accept overnight courier service for a notice of non-renewal, only because sometimes that document is so old, the address on the letter of credit itself is extinct. So if you send a notice of non-renewal to 70 Pine Street, where we were for years and years and years, and now we're in beautiful Jersey City, right? We won't get that notice of non-renewal.
Sure. Sure.
And that'll cause a problem. So to ensure that we get that notice of non-renewal, we ask the bank to send that notification by registered mail to the post office box. And that mail gets picked up every day at the post office box and then sent directly to us.
Okay.
And so one of the things, I guess, just to kind of add on to what Don said is that within the system, there's flags. So we have a maturity schedule that when someone unclicks that flag, that the notice of non-renewal has been received, it'll pick up in the system in our reporting and say that this letter of credit is expiring. So we'll see it and we'll know, and then kind of reach out to the, you know, once we get the notice of non-renewal, we'll already be reaching out to the business units to say, are we getting a replacement, or should we potentially draw on this letter of credit to retain the collateral there? And then if, you know, while that's going on, it still shows in the system kind of a countdown based on when the effective date of the letter of credit. And so the clock starts ticking. And so we usually will then send a draw within 10 days of the letter of credit expiring to the bank to draw if we have not received a replacement and there's still exposure on the books where that collateral is still needed.
Okay. Okay. The struggle that banks have, I'll just share this with you, is, you know, when it comes to notice of non-extension, that's a huge event for us. And we're always tracking the delivery of that exposure and tracking to see who signed for that particular notice to make sure that, in fact, AIG received it. So, I mean, when it goes to a PO box and it goes by registered mail, is there is that individual that's collecting those items signing for those, or how does that work?
They should be signing from at the post office box. At one time, we were actually ourselves, when we were in Manhattan, we were right around the corner from the post office. So we would actually go and pick up any mail that was at the post office. And once you get that mail from the post office, you have to sign off on everything that they give you. Okay. So there is an individual that's signing off. I believe it's somebody in the mailroom that handles this right now.
Okay. That's fair, because that is one of the challenges, because, you know, as bankers, you know, that is a key thing to help us mitigate that risk, to make sure that, in fact, you guys did get it and it didn't roll over for an additional period. Curious. So receiving a notice of non-extension is one of the criteria that you would use to draw. And usually within 10 days, it sounds like you're going to make that determination whether you're going to draw or not. What are the other conditions that you would use where you've decided you're going to draw the letter of credit as opposed to just leaving it out there? Are there any other conditions?
So the notice of non-renewal would be the only condition where us as a department would have the okay by AIG to work on our own to draw on that letter of credit. If for whatever reason nobody got back to us within the organization and said, you know, don't draw that letter of credit. Once that clock, as Chris said, starts ticking down, we automatically have a go-ahead to go and issue that drawdown. And it happens all the time. If it happens within that window where we sent the drawdown out and business unit comes back to us and says, no, you know, we don't need the letter of credit anymore. let it expire, then we would immediately go back to the bank and tell them,
Okay, that's
we're,
fair.
we're rescinding the drawdown. Don't draw on a letter of credit. Other than that, what would happen would if there was a company that is in default that we are being insured by and they owe us funds, then the business unit would be the one that would come back to us and tell us, we have this letter of credit, company owes us money, they didn't pay their premium or whatever, and it's overdue by a certain amount of days. We need to draw on the letter of credit. The company's going out of business.
Okay. Okay, that's fair. That makes sense. I'm going to jump ahead because I've got an interesting question that was just raised. One of the things that's happening in the banking industry is there's a big push for digitization. Everything's going electronically, and and if you look at Swift. Recently, Swift has changed the 700 message types, and there's actually a message type now that is specific to notice of non-extension. So the question is, what are some of the discussions going on in the industry with regard to digitizing the process, digitizing the notice of non-extension? And then the question that was just raised is, would you accept an email of a notice of non-extension?
So Chris, you're the master of optimization and digitization.
So I think the answer is that some of the largely at the beginning of COVID, there was an initiative by AIG was to undertake and assess. That I think that was the biggest concern, is not being able to get notices of non-renewal, but also not being able to receive our letters of credit and just know what's coming in. And so, one of the questions we reached out to the larger group of banks within our bank group where we're the beneficiary of letters of credit, was to ask them what was their approach in terms of providing digital via email. I think that was kind of the first and the quickest one was, would that be acceptable? And kind of what the resounding feedback largely was on a best efforts basis. And that was largely because they said legally their, bank is obligated to honor the terms and conditions within the letters of credit. And so if the letter of credit indicated that the notice of non-renewal had to be sent by mail, then that would have been the process and the protocol in which they would have had to deliver it. Short of the mail stop running, that would be the official method. Now they've offered to provide those on a best effort basis. And so I think that was one of the questions we were saying. So then how do we operationalize receiving those notices of non-renewal, right? So if we did get them, how would we handle that? And so I think what ended up happening is we didn't need to go down that path. I think we were able to continue our mailroom, establish a process of being able to scan all the notices of non-renewal. The mail never stopped, of course, we all know, through COVID. And so they continued to pick them up from the from the mail, the post office box, and scan them to us. So we were still able to get them, but it did raise a concern in terms of what happened if that mail became disrupted due to COVID, right? Then we would really kind of need to find out. And again, reaching out to which banks provide the largest number of letters of credit to us is kind of the first line of defense, going to those banks and saying, can you send those to us if you can? And so what we then began to ask in those same calls were, what's your capability for providing Swift? And so we also heard around the expansion of the Swift series for the notices of non-renewal. And some banks indicated that we can do this by Swift. Some said we do offer Swift, but we don't do Swift for this series, and something that we're looking to expanding. But then the biggest hurdle that we encountered was the regulations that govern letters of credit, right? The language at which the New York Department of Finance, there is a specific template that governs the letter of credit that they have put out. And that letter of credit doesn't say that does not say anything about digital letters of credit. But we did want to have that approach, that discussion. And so we kind of took a two-prong approach, talking to the bank group. Can you do this? Right? Can you provide this via SWIFT or some other digital means? And the other was going to the regulator and saying, hey, is the digital letter of credit viewed as equivalent to the physical letter of credit? I think there was some, on the regulator's part, the question became, we need to do some more homework, right? I think they mentioned this forum, the BAFT, and said, you know, that we're looking at engaging the banks and trying to understand this more and kind of, I guess, wrap their head around what new risk does this pose, right? The known risk is this is being delivered by mail, but on a digitization, what would be the standard? You know, you can do FTP, possibly. There's a couple of vendors out there, Bolero, GTC, Mysis, right? That handles some of this, right? And so those guys came up. We've spoken to a few of them that have you know, varying solutions, either direct connect, FTP, or SWIFT. And so that could potentially handle a big portion of the letters of credit that we currently, you know, do with the big banks. But then, you know, there would also be these kind of outside banks that we don't have a solution for. And I think that's okay. Just kind of understanding the landscape in terms of where we operate. But I think that was the biggest view is that the regulators just aren't there yet, and that they don't have comfort. And until they get there, that poses the biggest challenge. The other is, all of these letters of credit would ultimately need to be reissued, right? We could only get the SWIFT for the banks that could offer SWIFT. We learned they could give us a SWIFT notification, but we could not transact on these letters of credit because, again, the terms and conditions, these were paper issued letters of credit and not SWIFT letters of credit. So we couldn't do any, you know, site draft draws, terminations, new issuances. It would all have to. So, you know, we have probably close to 3,000 letters of credit, a little more than 3,000 letters of credit. And we would have to work to reissue those that need to be reissued to do SWIFT. So I think that's quite, you know, those were some new hurdles that we know. There's an AIG centric or insurer centric, where converting from paper to digital. And then there's also the regulatory landscape that, you know, we continue to look at and having discussions with the regulator on, you know, getting there.
Okay. That's great feedback. I know as a banker, I would much prefer to deliver something digitally because I could track it, I think, a lot easier. And I have more comfort to know that it's in your hands as opposed to putting it in the mail and keep my fingers crossed. So that's kind of the challenge there. And I'm really glad to see that conversation is going on. I was actually involved in the conversation at the beginning of the pandemic with AIG on digitization, and it just seemed to fall off because the urgency seemed to diminish there. So this is good stuff. Well, we're at the end of the session, and I've got about a half a dozen more questions written down, typed, and have probably another dozen questions that I've handwritten for you guys. But you know, I want to thank you for your time. I want to thank you for joining us today and sharing this information. Don, I wish you all the best in retirement. Enjoy. And Mikhail, we'll be talking, I think, a little bit more in the coming days. So again, thank you all. Appreciate it.
Thank you for having us.
Yep.
Thank you.
Thank you.
Thank you.